Selecting the right sectors on the ASX is critical to strong performance in the weeks and months ahead. Gary Glover's written his report and is guiding us through the top shares this week. Good morning, Gary. How are you?
Yeah, no, I'm good, Chris.
We're back to the old-fashioned recording this time. We're outside of the studio, but we're both doing it remotely. We're looking at the report this week. You've got standard portfolio summary on the page, and then you're jumping into the NASDAQ. Now, the NASDAQ, what I note here when you put this chart in, is this super tight consolidation over the last couple of weeks. Right in the last three are well and truly inside that range of the last four. Overall, that probably doesn't change anything, but does that compression mean anything to you?
Yeah, look, it was a little bit of a concern there, just sort of getting a little compression there. And also, I think we were up Monday night and then we were down last night. A little bit impulsive, the move last night, a little bit of volume in there too. So that's made me a tiny bit nervous there. I have sort of shaved one or two positions today, but still sort of see like a, I was sort of looking at this sort of pattern there and look, that little, it might just be a little minor sort of, ABC off the high there in the daily chart. Can't sort of see it there, but there's a little three wave within the daily. Usually when you sort of see a congestion like that under the high, you'd normally sort of see, like maybe only sort of 20% of the time it might have that little small ABC. Most of the time there, it'll probably congest back a bit further. So just kind of told me that maybe we'll congest back. I know that, look, the futures are up today, but yeah, but still see, still see hedge funds are, a net short here. Speculators are a net short. Money managers are holding most amount of cash of holding for quite some time, but everyone's, the big money is underinvested here. So it's hard to get too negative when I just sort of see that there's just not, people aren't long here, and there's a lot of shorts out there. It might just meander back a little bit here. I just trimmed a couple of things just to be safe here, but the betting money is probably just for maybe a little bit more of a, might edge back a little bit in the range. I sort of noticed when I saw a few tight ranges sort of got like in the past, you might just get a few tight ranges on its side here and then pop through there. We've got a few breadth issues there, but okay, it's not, it's obviously better if there's better breadth, but it's not unusual after a, bit of a growth crunch for it to be a slow recovery. It's sort of, everyone's wanting to see the breadth of the market change pretty quickly. That's oftentimes after, the bigger corrections, it takes a bit longer to get going here. So that's, a normal pullback, you'd see, big breadth here already reversing there, but this is not a normal pullback. It's actually quite large, it's a pretty decent sort of correction there in the market there. So it's going to take a bit longer, I think, there, Chris, just to sort of build here. But at this stage, probably, we possibly could sort of meander back a little bit here. So I've trimmed a little bit there, but still pretty long. So, that's why I view it.
Well, the S&P 500, you've also shown the charts somewhat tighter, and this has been the tightest it's traded for some time. But we're hitting reporting season now on the US indices. Are you hoping that it holds the swing low, or what are you looking for in this movement?
Yeah, similar to NASDAQ there. I mean, I was sort of looking through some of the building phases in the past there, and they can sort of kind of meander up here, not impulsively, like a classic wave three. Again, sometimes these bigger corrections, particularly when there's been a fairly substantial sort of growth crunch. Some sectors have been pretty beaten up pretty bad there. Obviously, tech and stuff in particular, but it can just take a little while to sort of build there. And the other thing too, Chris, is that we're sort of seeing it is that the leaders in the past aren't going to be the new leaders. It's going to be a sort of new leadership group emerge. It maybe takes a bit of time for them to emerge. Everyone's betting on the old winners to, like the Tesla and stuff there, to sort of be the new winner there. That's not going to be the case. History says that that's not where you should be putting your money. So we should be looking for new leadership groups to emerge here. So, look, I just sort of noticed a few times there when we sort of tighten up like this after a bit of a move, it can sort of have a little maybe a couple of weeks pulling back here, but kind of on its side here. I was trying to sort of see, there's a few sort of phases there, maybe late 2020, where we had a few, side weeks there, I think. 21 in July, they had a few sort of side weeks along the move there. So you just might get a bit of a sideways shimmy here for a couple of weeks. But you still can't get too bearish here, I guess, is the main thing. Even though the market's not, I'd love to be seeing this market open the shoulders here, but just hasn't quite done it yet. It might congest under the high a bit longer, then maybe push through later on. So, those inflation numbers obviously still, easing off today, which is sort of good news. That should be, history says normally, inflation doesn't need to go back to the lowest levels. It just needs to be sort of heading down in the right direction. The market's going to have a pretty decent rally here. So, you just got to sort of stick with that for the time being.
Well, that's good news on the inflation, and probably a good point to pivot into the Australian market. You've said for some time that the commodities have been a large part of the Aussie market, partially holding you back. Now, how does this relate to the Aussie at the moment? Because we've come down, you noted it was sort of 7 consecutive weeks. We've bounced a bit. We're sort of halfway between that range of recent high and that recent low. What do you see from here?
Yeah, probably just a bit further than halfway, actually. So we've had a pretty nice rally off that deep low there. I had a pretty strong bounce, actually, probably stronger than I initially sort of thought. The only negative in there is that last week there was a bit of a, the volume was up there. So that was sort of almost sort of signs of distribution, even though it's only really small range. There was a bit of selling there, and that was in some of those big cap miners. So we saw BHP, Rio, Fortescue, things like just, they sort of came off a little bit there, just sort of a little bit of selling here. But yeah, I mean, look, it's there's some vulnerability there, no doubt about it. But I still think, after such, that sort of larger sort of 7-week decline there, I think there's more chance of sort of moving up here. But our market definitely doesn't look as strong as the US market. And I have been concerned about resources. It's just the normal cycle, Chris, is that, bonds sort of have their bear market first, and then equity second, and then commodities there. So we haven't really sort of had that. And that's largely due to inflation. So normally, if inflation's higher, then those commodity prices do quite well. But this is the big if here, isn't it? If inflation is starting to ease here, then those commodities should ease as well. And that, maybe the commodities haven't had their end of their sort of bearish phase here yet. So that's always concerned me a little bit. We got a bit of a rising wedge in a way there, but just the fact that our market in the past there has often found a low after the US markets after these so-called growth crunches. So it's always So for me, people keep asking me about BHP and Rio. I'm finding it too hard there. I think there's some substantial risk to the downside. So for that reason, I've kept away from them there, just because I think there's some vulnerability there.
Well, that's probably also a good point to move into the materials index you've put into this week's report. So it's the index that does cover BHP, Rio, Fortescue, as well as other materials and mining companies. We're looking at this one here. FB, we know that your summary false break just above that recent high there, so edging above it. And then is this recent low also edging below that little one there, that recent low?
Yes, I mean, the thing about understanding this chart here is that obviously the materials has been going up for quite a while. So that's basically, if you look at a monthly chart there, you'll sort of see it's a pretty bullish sort of trend here. But the last thing on the trend here is a sideways orientation here. So we had a decent pullback, go back, retest the high, retest the low, false break of the low. So, oftentimes when we see a false break of the high, I'm always looking for it to come back and retest the previous low, which is exactly done in this case. And then that's a false break of the low. So we're looking for a slight new, retest of the previous high, which exactly we've done here. But now we're sort of, again, another classic little false break here. So this sort of, these overlapping trends, they're not strong trends. That's a corrective sort of sideways trend. So sideways trend means it'll sort of stay in the sideways range here and come back to the bottom here. But on the sort of the monthly sort of chart there, that'll sort of show like an overlapping top here, like what they call this broadening top. And they're quite bearish sort of patterns there. So that does have me a bit concerned here. Definitely seeing signs of distribution, so sort of some stronger volume on the down weeks, some lighter volume on that weeks. And I did talk about this probably about a month or two ago. And then we saw last week was pretty strong volume, again, in that sort of material sector, and some pretty aggressive selling. So yeah, just got my concerns there with sort of BHP and Rio, Fortescue, just some of the bigger miners there. So yeah, so I just think there's a good chance here we could my concern here, Chris, is that this last leg down can often be pretty aggressive. That's the risk here. So I don't think anyone's going to see a big decline in commodities sort of coming here, resource stocks coming. And history says that's a possibility. It's actually, it's a reasonable possibility. So I'm pretty negative here, commodities and resources. So just might try go index lower there. I thought I was pretty impressed today that considering how aggressively they were sold off there end of last week, our index held up pretty well. So I thought that's actually not a bad sign. Maybe the rest of the market can do a little bit of heavy lifting here, but that commodity materials resource sector, it has grown in our markets. It's a much bigger segment now. So it's going to be hard to sort of see if that does cool off here, how our index can sort of stay where it is. But yeah, so sometimes our market can vary from the US market, and it's often vary the most at the end of this commodities sort of cycle. So that's my concern here.
Well, that could take us into the BHP chart, which is the largest on the ASX, roughly about 10%, give or take, of the index. And as you're saying, it is heavily weighted. You've got 0, 1, 2, 3. So we've seen this a fair few times when you've kind of covered them on lows. Not quite what I'm highlighting here, but it's
that's exactly what you're highlighting, actually. Exactly. So that found a low, it sort of retested a low, come back, made us, next high, low, pull back again, and then the whole thing went. Okay. So then it rallied pretty high here. So sometimes these basing patterns can take a while to build. And it's the same thing in the distribution pattern as well. It can take a while for the whole thing to drop out of here. And look, these commodity resource stocks, I've often sort of talked about how they come back like 3/4 of the range. So I used to, in my younger days, used to look at the Fibonacci's quite a lot. And I noticed that the resource stocks would come back, 3/4 of the range. That's almost that 76.4. They would, pull back. So really, like a lot of stocks, you'd say, if it come back half the range, that'd be pretty large. Or if it come back, 61.8, that'd be very large. But commodities, the resource stocks, by their inherent nature, they often come back 3/4 of the range, come back really deep, flash back and forth, and really deep orientated in their ranges. But just not good to see a sequence of lower highs sort of setting up here, exactly like that base set up there, because a larger decline can follow. And if you look under the hood there, we saw some heavy volume into that sort of sell down. And we saw some pretty heavy selling start to come in here, last week too, off that high there. So just not looking so pretty to me, looking a little vulnerable. So to me, it's an avoid. A lot of people saying, I'm not even sure going to a marginal new low, I'll get interested here. Actually, I think, this has got the ability to actually surprise on the downside, in my opinion. So I would avoid here. I'll be very cautious here.
Well, if we're cautious on BHP, we're going to be looking for somewhere to put our money to increase to the portfolio. And you've noted a few volume spikes in these charts. Now, HMC Capital, again, continuing on that real estate investment trust that we picked up a couple of weeks ago, noting there was a lot of compression happening there. Some of them already started to kick goals from when you highlighted them. HMC's back down, when we talk about Fibonacci ranges, is that what we're looking at here on the blue numbers? Yeah,
look, I might be a little early here, Chris, but the big thing there is it's a fairly substantial sort of correction there, 2/3 of the range there. As I say, that's a big correction on the weekly sort of setup there. So it's going back to like the 20 low there, and so we're gone from basically just around $1 there up to 860 and then sort of come back to around 350. So fairly sizable sort of correction there. So substantial. What jumps out at me, apart from the sort of the Fibonacci range, that's kind of more of a minor thing. The major thing there is the volume. The volume over the last month has really, really elevated here. So we have bounced off that fib level, had a couple of weeks up. Volume has really, really been aggressive, elevated here. So we probably want to see a little bit of a contraction of price here. And if that, if no selling comes in, possible change of character there just to watch for. So possibly early here, but just that volume there was really, really just out of the box there. So that's telling me that there's some good signs of accumulation starting to occur here. So definitely one to sort of put on a radar and keep a close eye on there. We talk about the sector as well. There's a few stocks in the sector looking pretty interesting. Yeah, I do like that.
Well, another one in your report, PME, Medicus. This one's in a different space. It's much higher in relative performance for the yearly range and also pretty close to that high for the range. And what we can see is 2 weeks where it shot up, and then the last 4 weeks, it's kind of just come sideways. So is this where you're talking about a kind of maybe a small correction in time or something like that?
Yeah, look, it's just sort of struggling to go down there, Chris, too. Like just sort of had 1, 2, 3, the first 3 weeks down, no volume at all. And then last week there was a bit of volume, that was probably coming off the low. So we actually saw some volume sort of stepping in there, sort of picking stuff up. So just sort of, this is sort of a corrective, we've sort of gone back to retest the high, just sitting under the high, had a bit of a pullback there, but haven't sold off here. So we're sitting under the high there. So just in a few stocks here, congest under the high and then pop. So, TLX is sort of one, obviously, looking at there. So just, there's a few stocks sort of had a similar pattern there and, and I'm sort of breaking above here. So this is one to keep an eye on there. Has showed relative strength, Medicus. And just looks like it's sort of struggling to be sold off here so far. So even the last little low there, we sort of volume stepped back in again. So any sort of pullback there was sort of met with some, some buying there. So this is pretty interesting here. I think this one's sort of constructive there. Got the chance of sort of pulling up here. Probably don't want to see it go below that. I think last week's low. Don't want to go too much lower than that. Want to sort of hold above that. If you look at that sort of trend there, it stayed above that. I think it's the 20-week. Also, that'll be the 20-week, moving average there. So it's sort of stayed above that level there. So probably want to be, holding above that point really.
Okay, well that's PME. Another one is Appen APX. So in that artificial intelligence technology space, you've talked about ChatGPT. You've mentioned it before being a hot space to be in. This price has churned sideways, and another one where it's unable to fall lower.
Yeah, I mean, it actually sort of looked like it was sort of on its way there, basically, sort of in February. But then obviously it had some pretty bad news out. Oh, actually, had some very bad news out, and the stock got sort of, sort of cleaned out there. Initial selling there, but then the sort of selling dried up again. We saw a little bit of, buying volume coming off that low, and then it sort of got up to sort of 310 or something there, and had a bit of selling again, bit more selling through that. Probably not as heavy off the high, but some considerable selling after a bit of a rally here. And now we've sort of bounced again, some sort of modest volume there. And then the last sort of 3 or 4 weeks here, the selling's dried up here. So it's kind of the first time here that we've sort of pulled back here, and we haven't seen sort of selling dry up there. So you've got your sort of VCP pattern there, Chris, as well. So off the first high is obviously a large correction. The next correction is smaller again and probably less volume. And then this is our sort of third correction here. And we've sort of gone sideways. It's sort of almost like a congesting sort of pattern here. So, I think if we don't sort of see much volume through here and it pops out above this little high here, I think it's around 295, 296. There might be the current high there. Breaking out above that level would be probably a good little sign there. So that's a good little VCP in there. I just like the fact here, the last 4 or 5 days here, the selling's dried up. So it's the first time we've we can see the last two sell downs, there's a bit of volume in there. This one here, the volume's right, and then that's basically the classic sort of sign of the VCP, is that usually after the sort of, you go through this sort of these smaller corrections until the volume dries up, and then it pops through here. So I think breaking above this little short-term high here would be I'll be looking for that to potentially sort of follow that if I see that.
Well, that's one to definitely watch for. That VCPs, we know, really, really solid patterns and can lead to massive breakouts, and especially if the volume's on target. Now, we move, staying within the technology space, we go from software to hardware. Audinate to push out some hardware as well. What's happening here? Are they also congesting under a high?
Yeah, nice and tight. And look at that sort of 1, 2, 3, 4, 5, 6, 7 sort of weeks there now, sort of sitting under the high there, sort of threatening to break above. They just can't get through it there. The volume's pretty light, but it's been really light volume here the last probably 3 or 4 weeks here. So yeah, just got to watch this for I think if this sort of closes on the upside here, could break through. Also, I probably don't want to see it close here, maybe below, I think close below 840 there is probably not going to be good either. So yeah, this tight congestion is nice, but yeah, want to see a breakout here. So looks kind of constructive to me. But yeah, I'll just need to sort of close above that $9 range there. But again, if it closes above $9 there, I think that should be sort of followed there, looking at the profile there.
Well, the last one on the list is Bapcor. So yeah, we're looking at this one, was one that performed exceptionally well on the growth side of things. Huge range. If we're looking at the lows here in COVID, we're back to sort of $3, getting almost up to $9 pretty quickly. What's happening here in this sort of channel, is it, that you've highlighted?
Yeah, again, sort of tightened up here, sort of got a little false break there, and obviously early 23, which I sort of like, more of a sort of a square sideways orientation there, and then has sort of rallied off that low there. There was some okay volume on that rally there, but it just hasn't sort of followed through. What it's done again is just sort of congested again, and now it looks like it might be breaking through the upside here. Just needs to sort of kick on here, sort of getting a few. It's a sort of market there, like, if we go back to 21 here, if we'd seen this little breakout, we'd be off to the races by now. Would have been gone. There wouldn't have been too much, sort of holding back here. But it's a bit of a slow moving market here. It feels like it's on pause every second day. So yeah, but I still think it's sort of positive there. Just just give yourself a little bit of room there, but yeah, I still think it looks pretty positive. It looks like it sort of wants to go slightly higher there. Just that sort of corrective, sideways pattern. And normally it sort of would favour a retest of that high there. So I think it can sort of break above $7 there.
So that's a good one to watch for the weeks and time ahead. And that brings a wrap to your weekly report. So thank you very much for bringing us the report, taking it the day after Anzac Day, so the Wednesday. And we look forward to hearing what you do and you break down the market momentum leaders on Friday. Yeah,
just got to be a little cautious at the moment. Probably not go. I think I've sort of eased back a little bit with my holdings. Just sort of feel like the market's sort of a little bit in sort of second, third gear here. Can't really sort of get into top gear at the moment. So if the market's not really in that explosive or sort of strong phase, I think you've probably just got to be a little bit lighter orientated there. Just in this game here, it's about protecting the capital. So I think that's the most important thing. It's not about sort of being right or wrong there. So me personally, I'll sort of probably tighten up a few of my stops there, just taking a little bit of, some of the things that have really moved for me already, I've sort of probably locked a couple of little profits in. Just lightened off a little bit here, just in case here.
That's good insights for the portfolio. And we'll put on the right-hand side your series of Friday videos where you break down the charts, look for those that are potentially going to run, and also some trading patterns. You've talked about false breaks and VCPs, a whole series of different patterns. And then the left-hand side, your Twitter handle. We'll talk again soon.
Thanks, Chris.